Hello traders, thank you for joining us today. My name is Greg Lewis. I'm the marketing manager of Metastock, and I'm coming at you from our satellite studio deep in the south of Texas. We will be starting our main presentation in about 4 minutes and 30 seconds, and right now, let's watch a video.
Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you.
Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar Oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, thank you for watching that. We are going to be starting here in 45 seconds. Real quick, why don't you go ahead and like and subscribe and hit that bell, and you'll be notified every time we have a live event like this. We usually have one at least once a week. Do not forget that we do enjoy your participation. Please ask questions, make comments. We only ask that you be nice and respectful, just because that's nice. And if you're watching me right now and in a recording, you can fast forward this. But you probably won't see me because I'll be editing this out, but it doesn't matter. All right. I'm going to play some jazz music and let's get going. Thanks so much for joining us and successful trading.
You missed two. All right. Hello, everybody. Hope you're doing well. My name is Jeff Gibby. Good morning. If you're joining us from India, or good evening, good afternoon, whatever it happens to be for you. I hope you're doing well. It's good to see you. Thanks for coming in. If you are watching us on YouTube either now or in the future and you like what you see, hit the like button. It helps a great deal. We appreciate it. If you have questions today, I've got both of the questions panels open, and I'll be watching them and answering the questions the best that I can as we go. So also, if you're watching on YouTube, go ahead and hit the subscribe button. And you get a lot more really good videos like the one we're about to do. So anyway, let me go ahead and get started. As I said, my name is Jeff Gibby. I'm going to do the legal disclaimer, introduce our guest, and promptly get out of the way. So without further ado, let's do that. So here we go. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Also, Metastock and its employees do not endorse the purchase of any security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So with all that being said, I hope you learned a lot. Generally with these, what we try and focus on in terms of the events that we do is how to do analysis and kind of the process that goes into it. So try and make them as helpful as possible. Our guest today is Rahul Mohindar. Rahul is a really good friend of ours, a friend of Metastock, a friend of mine, just to be specific about that. Rahul has actually been one of our partners, one of our dealers for just a little bit longer than I've been an employee here, which I believe right now is like 27 years for me. He's a very, very good trainer in India. He's been featured on CNN in India, CNBC in India, and he runs a trading organization called Viratech Software. And if you're in India, I'd recommend that you do all your business through Viratech because they do such a good job in terms of helping people and that kind of stuff. Rahul has the other distinction of having the first trading system that I ever traded my own money with, and that's the RMO methodology. But today he's going to come in. He's going to talk a little bit about some of the new stuff that he's been working on, which is really cool. And so without further ado, Rahul, let's go ahead and get you started.
Thank you, Jeff. I hope I'm audible.
You're audible. Yes. And then I just actually sent the screen over to you, so I'll let you know as soon as I can hear you. Or as soon as I can see your screen. And we can't see your screen.
Perfect.
Cool. All right. I think my job for now is done. I'll get out of the way. It's your turn.
Thanks, Jeff. Well, I really appreciate the kind introduction, and means a lot when he says it's been the first system he's actually put his own money on. Metastock is a very, very committed company, and I don't say that just because I'm here to speak to you today. I've been recognizing this fact for over 2 decades. I've been talking about the fact that there are a lot of companies out there who want to pitch you software, sell you services, but the whole deal is there someone to back it up with the right education, the right knowledge impartment, whether it is in the form of live events, whether it's in the form of webinars. Metastock is someone that gets out on the road. I've done a lot of Metastock conferences. I remember right from Las Vegas to Sydney to India to Singapore. It's been a great opportunity to interact with people like you, users like you, and the entire Metastock family. So I'd first like to thank Metastock for organizing such an event. It shows its commitment to the trading community, and I think kudos to the fact that this is not something which is one-off. In fact, we did a similar event just 2 weeks ago, and it's great to do this kind of follow-up because a lot changes in the market, and I always like to update my charts and use more or less current data. so you could connect to it better and better. So today's session will definitely focus on the RMO ATM 4, which is an add-on inside of Metastock. Many of you have used the inbuilt RMO, which is there in Metastock, I believe, version 10 and higher. But today is about elevating to the RMO ATM 4. And the idea is to not just show you what's new in 4, but to give you a brisk overview over the next 60 minutes as to what exactly the RMO ATM as an entire suite has to offer. Uh, you would appreciate that whilst we do updates, we're not a company in Viratech that keeps doing updates every few weeks. We like to do updates when there's something solid, something really meaningful that genuinely adds value, if not beats what's already within the add-on. So we're not here to push to you 100 indicators in an add-on or 20 indicators in an add-on. We might have just 8 or 9 core setups, but the whole idea is to elevate your trading to a point. So I come to you as a trader to a trader. I'm not a stockbroker. I'm not selling you an advisory service, but yes, what I'm trying to do is educate you on how I take my trades. And if it helps you from a practical standpoint, because I like to trade both the Asian markets as well as the US markets. And that exposure would definitely be meaningful to you because I know a lot of you in this room may be from various parts. So I'll try and primarily stick to US equities because that's globally followed. So that's something I would work with extensively. And in between, I definitely like to look up maybe some charts of Asia, including India. So we'll take a brisk look at a few examples across the board with Metastock 19. So the RMO ATM 4 works best with Metastock 19. It can work with, version 17 and 18 as well, but I recommend you use it with 19 because this whole elevation from RMO 3 to RMO 4 is about using the strengths of Metastock 19, be it in terms of its power of technology, be it in terms of its displays, layouts. Those are definitely huge bonuses I see with Metastock 19. And of course, I have to say that Metastock 19, of course, is the best Metastock that you could definitely use today. So don't think twice if you're on the fence, which is the version to be using. Of course, you can use this add-on with both end of day and the real time. So it doesn't matter if you are someone who's, let's say, a passive investor who's not necessarily trading intraday or every second day or every day. You're someone who's just looking at DC or end of day daily charts, right? So you could be using this add-on with that. You could also be using it with real time. I use it with the real time and I'd show it to you. But of course, the functionality, the indicators are fairly similar. So a quick view on the RMO. The RMO was a system I introduced in Metastock, which focused on helping you detect a primary trend. When I say a primary trend, I mean a long-term trend. If the long-term trend is positive, we try and buy in the direction of that long-term positive trend. Similarly, if the RMO is negative or below a value of 0, we try and short the market. In other words, sell. We are looking at trading in the direction of the primary trend. So this is a very important element where the RMO is detecting this primary trend for you. And it's automated. I'm not asking you to load an indicator and put in a value even. You just load the template. It's pre-built. It marks out colors on the bars, arrows, and even marks out for you whether your long-term trend is up or down, right? As simple as that. You're not really twitching any values, drawing any lines, trend lines, support, resistance. Everything is objective and not subjective. Because when I tell you use a moving average, you could always come to me and say, can I use a 5 period? Can I use a 10 period? Can I use a 30 period? And that's where subjectivity comes in. In fact, I've seen it when people draw trend lines. You kind of draw the lines that you want to see, the supports you want to see. So I come from that school where we need to make trading practical, objective, and take out the subjectivity. In the heydays, I used to look at tools like the MACD, the RSI, and I know these are popular, beginner level tools. I'm not against any of these tools, but you can see a simple thing like RSI divergence, where price is making newer highs and the RSI has a negative divergence. You keep pulling this line on the right. As the market makes new highs, you keep extending this line right. And what happens is in this entire run up, you keep getting scared and you keep saying there's negative divergence, negative divergence, negative divergence. You could keep extending this line. Similarly, the MACD, you have a sell, a buy, a sell, and look at the little coral of signals over here. A sell, a buy, a sell again. And that upsets the whole rhythm. What if I could have a system which just says the long term's up and focus on the buy side? So when you look at this chart, the green histogram is the RMO. And if that RMO is above a value of 0, which it is right from, you can see from the very beginning somewhere here, all you're focused on is where to buy. You're only looking for the blue arrows which are marked on the chart or the blue bars. You're not focused on the red arrows or the red bars, right? The red arrows may give you some rotation. The red bar may give you some short-term rotation, but the idea is, in essence, we want to try and trade that long-term direction. This takes out my subjectivity of using things like the divergence, drawing it manually. You can see at every stage this market made a new high, you said negative divergence. And if you keep doing that, you're going to miss that whole run, right? So very important to me was to take out areas like this, whipsaws on the MACD, where you'd go sell, buy. You can't keep twitching around your position. I'd rather be with lesser signals, but a lot more steadier, right? So that was the goal of the RMO. The RMO trade model is available to you via a template. But what we did was to try and help you trade in the direction of the primary trend, trade in the direction of the stronger force. And to elevate this system, we came to a model where we introduced what we call a super filter. And let's jump straight into the super filter. And what this does for me is it gives me the potential of marking these bar colors into various uh, 4 different stages. So we've talked about uh, the orange color, which is bearish, the red color, which is further bearish. Then there's a light blue and a dark blue. So what do I call this? Why do I call this a super filter? The RMO itself is a very, very solid indication, right? We all know that it establishes that long-term trend with great efficacy, which is why it's such a popular tool within traders worldwide. A lot of Metastock users have bought Metastock because of the RMO, which I'm grateful about. And the point is, can we elevate from that? So super filter does an amazing job. Rather than using a static formula, the super filter adapts to the stock that you are looking at. So in other words, if I could put it simply, if a 10-period average worked very well on a particular stock, that doesn't mean a 10 period is perfect for every stock, right? So that's a static or a locked formula. But when you get into an adaptive formula or an optimized version of the uh, RMO, I call that super filter. And super filter would mean I would self adjust to the chart's volatility and then help you get a more profitable system out there, right? So super filter is like a tailor-made suit versus, a ready-made that you would buy. It's not like a ready-made doesn't work, but the super filter takes care of a lot of noise because in this case, noise in the market or noise within your signals is tantamount to saying that it is going to cost you at times, right? So let's try and pulse with the market. So you can see from a light blue, we move to a red color. And I always give you this rule, sell below the red bar's low, right? So you see this red bar over here, load and break, load and break. I'm looking for this arrow over here. That's the bar I'm looking at, the red bar. That's the point you want to go short. In between, notice the RMO went up. That's the old unfiltered RMO. And here's the super filter. The super filter comes to you in the form of bar colors. So when you see orange colors, you don't land up going long over here because orange is still a weak color. So you can see how we've elevated from the inbuilt RMO and gone beyond, right? So the idea is to elevate to a system which is superior, right? So does it mean that the super filter is a slower version? No, the super filter is often faster. For example, this red bar comes in much before the RMO even went negative. right? So you can see the RMO went negative maybe 2 or 3 bars later, right? And I can see that on the x-axis. So at times it will be slower, at times it will be faster. It's the adaptive mode that is working, right? The idea is to also understand. So if I looked at the original RMO system, and yes, I'm kind of running down, what I originally built, but no harm if we can elevate. The whole idea of today's session is how can I take you from where you are to something a little more superior and help you. So if I look at red colored bars going into blue, you see there's a lot of flip flop within the RMO. It went up and down, up and down. And that's what happens when you get a little choppy. When I look at this chart now, the same chart with super filter. So this one is without, and the next slide here is with. Notice it's all orange. So there was no chop really. You just stay short and you continue with consistency. So the super filter elevates your consistency and also lets you pulse this market a lot better, because from dark blue, you go into a light blue. And then from light blue, you start transiting into a sell. So the whole idea is, can we take it a notch up? Can we smoothen out what we have? Let's actually work with more charts. So the super filter is definitely a very, very solid setup to work with. It's one of my favorite go-to tools. In fact, let's look at a different time frame. In this case, I've got an Apple chart, and this may not be live. This is delayed data. And my intention of today's session is not to give you market direction, but to explain to you what these tools could do to you. For example, right now you see the bar color is a dark blue. But when you got that first light blue, the high was not taken out. Even these dark blues, the highs are not taken out. You could say that there's some kind of a barrier around that 192, 193 level. We're not able to kind of get traction through that. So unless we get through that, at least as a 30-minute chart user, I am not expecting further traction, right? So, of course, signals can change as we develop into this market, but you get a very clear headed idea that, I'm not thinking positive till we really clear those levels. So, it gives me that absolute clarity. And if you look at this whole run up that we had on Apple over the last 3 or 4 weeks, beauty, all blue bars. There was not a single red bar. There was one solitary red bar, the low of which never broke. So you can see that how consistently, right from April, right through May, you started out with a dark blue, punched the RMO into a positive, and boom, you stayed right through it. And after that, once you've turned red, we're kind of sticking in that zone till 193 gets broken out of, right? Or maybe another newer signal comes your way. So we have to keep a watch on that. So a lot of clarity in a market that's had a lot of jigsaw movement. There's been a lot of seesaw. There's been a lot of uh, you know price connections which it's made. And when I say price connections, I mean a lot of sideways price action. A lot of times where you've seen a whole week where the stocks between 180, 185 just kept oscillating. But the beauty is that blue color helped you stick your neck out. If you look at one of the stocks which dropped very recently, in fact, today for that matter, in its deepest sense, is Salesforce. And I'd love to show this to you because I got this question as to, how would I be able to handle this? Okay, it looks like I'm using too many layouts on my screen, but we'll come to that and we'll come to seeing how we could do it on that chart. But let's look at the next system, which I use very extensively, and we'll come to that chart in a bit as we go along today's discussion, is the breakout catcher. So this is another template. So template number one is the super filter, which is available to you with the ATM suite. And before I jump further, a lot of you would be wondering, how do I scan for these opportunities? So one is you can use the Explorer. So if I go into the Explorer, I have the ability to, of course, scan through the Metastock. So if you type in ATM, you would be able to see all the explorers for the ATM. So in this case, I'm doing breakout catcher buy. If you're looking for the super filter, that's there. So all of these are scannable. They have expert advisors, but what you'd really like to know is we have a separate application, a desktop application that you could run and get to know exactly, put in a stock list of your choice, a time frame of your choice, and choose indicators. So if you want to scan based on the super filter, you want to scan based on the breakout catcher, just add a column of your choice. So ATM BC is breakout catcher, and I could even get voice alerts and email alerts. In other words, it would actually talk to me and tell me whether it's a buy or a sell. So the beauty about this is you are able to scan for these as they happen on time frames you want. So for example, if let's say I don't want to look at this on a daily, I could say I just look at a 5 minute chart because I'm a day trader. It would scan on the 5 minute chart. So these are huge features because I don't depend on you as the user to each time every 5 minutes run an exploration. It scans the market for you live. Well, even if you have the time to do it, you say, okay, I can do it every hour. I look at the hourly chart. You don't need to. It's automatically going to do it, automatically going to run the scan and give you an output. So the beauty is you have the ability to scan within the application, which saves you a lot of energy of having to remember, oh, did I run the scan? Should I do it now? It's all automatic. The breakout catcher is another template we offer within the ATM, and this is for that kind of a user who wants a quicker signal. So the RMO is a bit of a primary trend sticker. Mind you, none of the systems that we've built within the ATM, none of the templates that I'm talking about within the ATM are trying to overlap each other. If they do, that's coincidence in terms of signal. But the whole idea is they're made for very specific goals and specific types of traders or temperaments, if I could put it. So the breakout catcher is meant for the person who temperamentally says, I don't mind more signals, but I want quick signals. I don't want to wait for the long-term trend to change and then trade in the direction of the stronger force. I don't want that super filtered signal. I'm ready to go in and out. I'm a, someone on flexible feet. I can jump quickly between signals. So for example, if you look at the breakout catcher, this marks to you three bar colors, a blue, an olive or a khaki color, if I could call it that, and a red color. So the breakout catcher computes by marking these bar colors, and these are automatic vertical lines that are marked for you. There's nothing that I have marked on this chart. This is exactly how you would see them, right? So if you see a breakout catcher, so this I'm using on the Nifty futures, which is the Indian index, one of the top traded indexes in the world. So like you have your QQQs and the Nasdaq 100 or the Dow. This is one of those top indices in the world. If I'm not mistaken, it does come within the top 5 or 10 traded indices. So a great instrument to be looking at if you're definitely within the Asian pack. If you look at the indicator here, that was a sell, and this is a 5 minute chart. And the idea of today is to kind of give you a flavor. I'm going to show you some daily, some 5, some 30, so that you get a blend of understanding no matter what my goals or horizon is, how I can be. So you get a sell with the red bar, and on top you have what we call a zone detector. The zone detector is an interesting study because if the zone detector is at a value of 0, which means here, this is an area where the market is dormant. And when I say dormant, what do I mean? When the indicator is at 0, it means that there's not enough volume or not enough volatility. And if you look down at the volume, you probably get a sense of what's happening. So I don't want to take a trade when the volumes are slim or the volatility is low because I could be in sideways then. So in other words, these buy signals are an absolute avoid for me, right? So even though I got the blue bars and the highs are crossing, I'm going to be like, no, I'm not going to take that. But if I get a red colored bar and I now look at the zone detector, this is at a value of +1, that tells me that this market does have, enough volume, uh, enough volatility. Because let's remember, any trading signal, if you have it backed with some volume, have it backed with some money, have it backed with some volatility, the odds of your being successful on that trade are significantly higher. If you're going to trade breakouts without money in them, without enough volume or participation, that's not a breakout, that's a fake out, right? So these are fake outs, if I could put it that way. We don't want to take those trades. Let's focus on where we have signals. So when I look at the red bar and I look at that over here, moves to a value of +1. And this is what we call hyperactive. So when you see these green histograms, like you see it popped right up here. So you got the signal there. You waited one more bar and you see it popped right up to hyperactive. That's a great point because hyperactive tells you you've got enough volume, enough volatility. It's above average volumes even. And that's a great reason to trust this signal. So you want to wait, like even here, if I waited 3 or 4 bars, it still stayed dormant. This is no good. This is a flat signal, right? But this one's a great one, which we got this afternoon, right? Around 1:30. We got a beautiful, it was an active signal over there. So active is when you don't have the histogram, and when you have the histogram, it's hyperactive. It is tradable on active, of course, but hyperactive is the best, which you got over here, right? So if you've got a buy and you see in the next 3, 4 bars, I'm not able to kind of beat up and move to hyperactive, um, that's definitely an issue, right? We want to make sure we punch out, get some uh, confirmation to that trend. So the breakout catcher is all about trying to be within a very quick move. In other words, trying to be a chart that gives you a very fast signal. So let's look at the next template, which is again something which I go to very, very often, is volume, which is one indicator that just uses volume. So let's recap. I started with the super filter, which was more primary trend driven, more a filtered signal. Then I moved to the ATM breakout catcher, which is a template designed around someone who wants to be on, fast feet. And now I'm talking about the ATM SWI, or the strength weakness index. And this indicator is only looking at volume, right? So very important. A lot of studies look at price data, moving averages, support resistances, volatility. But can we have an indicator that just looks at volume? And when I say just looks at volume, let's look at a few elements. We all have read that if price goes up or down with volume, that's a confirmation to the trend. So in other words, I could also phrase that as an increase in price with an increase in volume is a positive signal. Similarly, if the price drops, but the volume is also dropping, that is definitely a sign that that's not a breakdown, could be just a correction. So this whole equation of volume, that price is going up with volume or not going up with volume, is married into the SWI. So the beauty is the SWI doesn't look at anything else. It's hardcore volume. So if you're looking at a place to go to, and the reason I open NVIDIA here, and the reason I wanted to also show you Salesforce, which I will in a bit, is these are stocks which just had their earnings out recently, and you could see how they behave. And why I'm looking at these is some of these stocks have a lot of volume prior to earnings, right? I'm not saying that you can't always use the SWI, you can use it, but even pre-earnings, you get a very good indication. So if price is above this red line is the strength weakness index. If I'm above that red line, that's an indication of strength. If I'm below the red line, that's an indication of weakness, right? So if you look at what happened to NVIDIA somewhere around the 14th of May popped above the SWI, and above that high we go, and boom, we have that rally up. Similarly, you had a fall here. You got red colored bars, and these are automatic. This is inbuilt. So when you right click, you apply the template. All you're doing is you're going into your ATM and you're choosing the SWI. So these are all pre-built for you. You don't need to specially manually load anything. So the SWI comes in over there handy and takes you into that move. So even a movement like this, where you got that red bar, is definitely meaningful. So just from that low to this low is well past 10%, I would imagine, right? So, and mind you, this is a daily chart. If you did it on an hourly or a 30, you'd obviously get more and much quicker. But, there you are, about 12%, low to low. So huge movement. That's $100, right? Plus. So you got huge movement that's coming in just based on an SWI where you can understand where. So how is it measuring this? It's measuring the fact that this drop that's happening, when is the volume good enough to break this uptrend? right? So that whole equation that I just talked about, if price is going up, is it going up with volume? So it's not just a breakout of price, it's also looking at how's the how's the market action in terms of volume, because volume is equal to money, and that is evidence of having a very solid trade. So one of the things I definitely recommend is use a study with volume. Use a lot of price driven indicators, but this is a great way to use a study with volume. So let's look at another study which I go to very often, and this is the next template. That's the ATM Trend Decider Suite. So this is a very unique study, if I could put it that way. When I say unique, uh, it's one of those studies which updates every day if you're using what we call a trend decider daily. And then we have another study called the trend decider weekly, which updates every week. So here you can see this red line is the weekly. So every Monday morning, you have a new level for the entire week, right? And if I could, simplify this, if I'm trading below that red line, I'm bearish for the week. If I'm trading above the red line, I'm bullish for the week. So think of it as an important level for us. But what if I'm trading below both the daily level and the weekly level? The daily is just for the day. So not only am I bearish for the day, I'm also bearish for the week. That's even more solid, right? Right. Another great way to use this is, how about if I said if the green line is above the red line and the price is above both? If the green line means trend decider daily is greater than trend decider weekly, that itself is another huge positive. Plus the price is above both. So this equation that I just talked to you is married into the x-axis ribbon. If you look over there, there's bullish and bearish written for you. When all these three conditions get met, it stamps a green color where you can start your buying. And why did I say three conditions? Let's recap. Price closed above daily, price closed above weekly, and the trend decider daily line is above the weekly line. Similarly over here, price closed below the daily and the weekly, and the green line is lower than the red line. So in other words, trend decider daily is now lower than the weekly level, right? So the beauty is, and no matter how much history I go into, this keeps a beautiful track on the momentum of this market. I mean, just look at that. Green was lower than red. You got the bearish sign, boom. And mind you, these are real charts. These are not charts that I specially chalked out for today. This is real Nifty futures data, right? And it doesn't matter if you used it on any chart that you like. The beauty is it's not just giving you the levels and telling you, oh, above or below this is weak. It's stamping it for you. You can go into the expert advisor and even read the commentary. The whole idea being that you will understand exactly what is this indicator trying to suggest. So here it tells you these are the different values, and it gives you a one clear answer that the ATM TD is bearish. And you can read through that commentary further. And then if you're also trying to marry the volume element, you can see the SWI is also in a bearish. The ZD is the zone detector, which I just talked about. The zone detector also suggests we're in a fairly active zone. So there's a very qualified signal. So the beauty is interpretation is automatic, signaling is automatic. You've got the x-axis to help you. All we need you to do is try and stay disciplined as to what are the symbols you're going to trade and what are the intervals you're going to follow. See, in today's webinar, I may be running and jumping between a daily, a 30, a 5 minute, a 60, and that's because in this room, there could be people trading various markets in the world on various time frames. The idea is to give you an exposure. Personally, would I trade 10 different time frames or 10 different symbols? No. I'd rather like to keep my list nice and short, but that's just me, right? And I'd like to work with one time frame. Because what happens in reality is I can show you a great system, but then when you start trading it, you keep changing the stock. So if let's say you decided, oh, I'm going to trade, let's say Amazon, and you did 5 trades in Amazon and the last 2 trades didn't work out. You say, oh, this one doesn't work for me, doesn't suit me. Let's stop trading Amazon. Let's start looking at, trading Microsoft instead. So what happens is you don't do 10 trades in a row. Till you do 10 trades in a row on the same rules, the same stock, the same system, the same amount of money, how do you know you're 6 or 7 out of 10 accurate? You don't. You never really pulse it. So, especially if you're a beginner, especially if you're new to this add on, take those next 10 trades, take the next 20. I mean, even 10 is not good enough. And then you'd feel and chime in with the results that it's actually delivering. The mistake we do is we relate today's trade as everything. So if today I did a trade and it didn't work out, oh, this is not a good indicator. Let's look for the next one. That's not the way we need to treat our trading systems and indicators and treat our trades. That's really not a great way to look at trading as a whole or investing as a whole. We need to be fair to ourselves. We need to be fair to the systems we use. We need to be fair that we're not going to be jumping between time frames, because a lot of times when you lose money, you change the time frame. And when I say you, I don't directly mean you. Of course, I've seen this within users. We start with a 5 minute, and that includes myself. When it doesn't work out, you know what I earlier used to do? Look at the 15 and say, give myself some consolation that, oh, the 15 is still intact, just hang in there. And then that becomes a snowball. Later on, as it drops further, you start freezing. You don't stop out. Then you say, oh, but the daily looks okay. I'll hold on. And that unfortunately becomes, the uh, death threat in terms of trading. So let's not get into those pitfalls. We need to decide what's the time frame we want to trade, lock that in. What are the few symbols we're going to trade, lock that in. What are the systems I'm going to follow, lock that in. Let's trade the next 15, 20 signals in a row. Be fair to yourself. You will come out as a winner, right? That's very important to me, very important to you, because then only you'd be doing justice. So again, I'm going to recap before I jump into more systems, even though there are not many more. We started with what we call the ATM RMO super filter, which is a lovely way to look at a refined, filtered primary trend objective or the long term trend objective, keeping the major trend as its core focus. We then move to looking at the breakout catcher for someone who wants very quick signals. The good part about the breakout catcher is the zone detector comes in handy and tells you if the market's dormant. It saves you from a fake out, and therefore the breakout catcher becomes a successful tool, even though being a little quicker. Then I showed you the ATM SWI, or the Strength Weakness Index. That tool is purely volume driven, and that is something which I believe each one of us should inculcate in our trading, because we have a lot of indicators out there that use price so extensively, but nothing that uses volume as its heart and soul. It doesn't use price, it only uses the movement of volume, right? And now what I'm talking to you about is the ATM Trend Decider. This is a momentum play, and it updates based on the daily and the weekly. We even have a trend decider monthly. So if you go down the list, you can look at all our studies. They start with an ATM. So you can look, there's a 15-day, there's a daily, there's a monthly, there's a weekly. You may say, I don't want the daily versus the weekly. I'm slightly longer term horizon, right? So mind you, I'm using it on a 30-minute in this case. If I change this chart and I said, look, let's look at it on a hourly chart instead, the value is not going to change, because that is constructed using the daily chart or the weekly chart. So what's going to happen is the value is going to pretty much stay the same. So let's not panic uh, in terms of uh, what exactly is the value, etc. It's not, it's just going to be static. It's not going to change. Now let's dive into some of the newer systems which were there within the uh, ATM4, which are the newer systems we introduced. And then I'll also look at someone who trades options. We have the RMO2. So just a quick look before I dive into that. The RMO2 is all about trying to buy pullbacks. So every time you have the indicator, so that was the zone detector on top, which we used. But what I'm now looking at is the RMO2. Here, when you look at a pullback to zero, these pullbacks to zero, so wherever I've circled them out, those are points you buy call options. So this is more designed around the options trader. And you buy calls because the market's had a bit of a correction. and now you flattened out. What's your stop? Well, if you're buying calls, the maximum risk is the premium that you're paying to buy those calls. And if you turn negative on the RMO, in other words, here you go to a value of -1. So if the red spikes down to -1, you can use that low, breaching that low as your stop, right? So breaching that low, which doesn't happen, as your stop. So it's a great way to buy calls when the market is declining. Usually people buy calls in an inclining market, and that becomes risky. You want to buy calls when the market drops. Calls are cheaper when the market drops, and therefore your risk reward is in your favor. And you're somewhat trading a bit of a counter trend approach. And last but not least, we have another one which is actually called counter trend indicator. This is the most straight cut one. It marks for you various buy and sell points. And again, this is largely volume driven. And all you need to do is look at when you get the first buy, below moving average. So in this case, I've used over here the trend flare, which I'm just going to get into, but you could use a moving average, and you're looking at the first sell. So if you've got a rally up, you're looking for a counter trend, the first sell. Similarly, you've got a move down, you're looking for the first buy, but the high needs to get crossed. So if you're trying to look for somewhere where the market's going to turn from an extreme point, so here you had a buy. So you look for above that high, you think there's going to be some movement back to that red line at least. You can then follow it up by checking if you have a breakout or not. So the counter trend is all about trying to give you market reversals very quickly. Now, again, I've briskly run you through these, but remember, we've got a beautiful manual out there, and this is available on metastock.com/downloads. If you go into your account, we have it all up to date, 2024, all the new indicators, all the old indicators, everything is very well documented for you to read through. Not very heavy, just about over 50 pages. Great way to kind of start out is to go into what the indicators offer to you. Now, you may not have to use all the indicators. I don't think you should be using all the indicators, because it's a bit like, I give the example, you have a buffet, you don't have to eat everything on that buffet. That's going to get you sick. You need to use very few of them. Maybe just one or two strategies is good enough for you. As I said, if you don't trade options, maybe I don't want to look at the RMO2. If I want to use, just the primary trend objective, maybe the super filter is good, and I couple it with the volume view of the SWI. Let's look at the trend flare, one of my favorites. Okay, we've got CRM open here, so let's look at a huge benefit we get with the trend flares. As you can look, there's a what we call a baseline. So the red line, or the orange line actually here, is what we call BL. And BL slow means I want smoother signaling. So we have two versions of this. We have a slow and we have a normal. I always tell users, take your time on it. You don't need to rush, but the whole idea is to help you get into a trade when you can see that the baseline is breaking. Now there are also what we call flares. So you can look at the top window. You can look at the little orange flares, right? And that's why we call them flares. If the flares are down, and where did Salesforce start turning down? Is when the flares started coming down somewhere around the 21st of May, when we were at about $285, right? Flare down, flare down, flare down, flare down, flare down, flare down, flare down. One flare up was there, and that's marked by a little diamond. I call that the sweet spot plus, SS plus. If the high is not taken out, that flare is not validated, right? So you want to make sure that whenever you get a flare down as well, the low is broken. In this case, you can see all the lows are broken. And plus you can see the baseline, this saffron line, this orange line is also broken. So that's beautiful. So the flare gives you an early indication there. As you break the saffron line, you got into a nice bear movement. You got a little buy there, didn't qualify, neither was it above the baseline, neither did the high get crossed. You stay short, and you can see how beautifully you got settled into that. It was a similar story even when you looked at Nvidia, for that matter, which also announced earnings, and this was the flip side. Salesforce had its traction down. In the case of Nvidia, you can see I'm now using the trend flare normal. Now you may say, what's the difference? Well, it's not a huge lot. If I just change this whole study and I said I want to make this, so I can apply a template and choose that I want to look at the slow version or the normal. Now, you may say, look, Rahul, how do I decide which one is good for me? Number one, ask yourself two questions. What is my trading pace? Am I someone who's a little more laid back, likes to take fewer trades? That is obviously going to mean that the slow one is maybe the one to go to. Also, give your stock some bit of a check. For example, Nvidia, or for that matter, a Tesla, may be a very rapidly moving stock. These are stocks which move in a very different fashion. They are not something which, it's not a Starbucks, for example, which takes a little time sometimes. So uh, something which has a lot of price action, a lot of volume, a lot of madness to it. I think it's a no-brainer that normal is what you want to go with, right? Slow is something. Now, it's not like I can't use slow. Well, even within the madness, I may say, look, I'm not interested. I am only good with the slow one. I'm fine with that. It's designed to try and help you no matter what kind of a trader you are. If you want to go with the slow one, go with the slow one. It's not going to make a big difference, right? So just for purposes of today's webinar, I've kind of locked my resources here so that we have a smooth show. And I picked these examples out, so I'm not going to try loading too much because that's not going to work for me. But you can see over here, NVIDIA, you were above the baseline, and you can see the baselines also on the ribbon there. And the flares were all on the positive side. Notice the little orange that came in over here, neither did that low breakdown, neither did that baseline really break down, right? You have a little bit of an orange, which is probably seeping in, today. Low is not broken down, and we're well above the baseline still. So, no panic attacks there. So, the whole idea is to have the trend flare do this job. And, this is my newest addition within the ATM4. And the trend flare gives you this comfort of having a fast mode, having a slow mode, and that's what I really like the most. My favorite is another tool which we introduced, which is the support resistance tool. Now, a lot of people do support resistance manually, and I wanted to change the way I do support resistance. People look back at various highs and lows. I wanted to arrive at a support when multiple indicators pointed that breaking this level I'm weak, or arrive at a resistance when multiple indicators point that crossing this level, I'd go strong. So the blue lines that you see are resistances, and the pink lines are what we call supports. So you could put your mouse over and you can see this is a support, that's a resistance. You may say, that's all fine. How do I use it? So this template is a lovely culmination of the trend flares. So friends, what you see over here is the green color is the baseline normal, and the orange color is the baseline slow. So I'm blending in everything into one plate now, right? So I've put both those together. Now you see resistances. So you're crossing a resistance over here and you're punching out both the baselines. That's a beautiful little breakout there. That's a lovely breakout, right? If you want to add more strength to it, of course, if the green line gets above that orange line, think of it like a crossover. That further elevates strength. So in other words, what I'm really interested is, am I punching out resistance and going above both the baselines? Similarly, am I breaching a support? So look at this support. There was a support here too. The support broke marginally, never really closed above it. So I like to always use close. And, was it breaking both the baselines? Not at all. It didn't even break baseline one in this case. So even here, you broke the support, close below, but couldn't really puncture that low. Didn't even break the second baseline, right? What's so different in the down break that you see over here? You have a support level here. Not only was that closed below, you also punctured both the baselines and that low is taken out. So you can see that there's a bit of a shift, at least on that trend flare. And you can see how it resisted here beautifully. So that was an amazing little signal. We couldn't cross that resistance. So even the next one, if you look at the next one which came, that resistance held so beautifully. We couldn't really knock that out on a closing basis. And even if you did, really couldn't go above the high. So the fact that you resisted was sign number one. Then you broke support, sign number two. Then you punctured baseline, sign number three. So there you are. So, even if you woke up at the close of the 29th around 18,740, that also is indicative that, that's where a shift has started, right? So the whole idea is to identify points. So one way is to say that, look, I'm looking for, you know, looking at these charts on an end of day. I keep getting that. Will it work end of day? Well, of course. I mean, it's designed to work on any frame that you want to use. And again, I've kind of locked down all my charts here just for today's webinar, but you have the comfort of going into any time frame of your choice. And therefore, don't panic. If you use an end of day, it does work end of day. The only difference is the charts don't take live versus the charts that take live, right? So the beauty is all of this stuff which I talked to you about, we have it programmed into that scanner. So if you're like, okay, can I get wherever I've got a sweet spot, I want a list of stocks where I've got a sweet spot right now, and I want them on a 60-minute chart, or I want them on a 30-minute chart, you have that ability. You even have a beautiful expert advice, and you say, look, I don't understand this too well. I'm new to this. Can I read a little commentary about the trend flare right now? So just when I look at the trend flow over here, this is NVIDIA, and I can see if I followed the baseline, normal mode is also bullish. The slow mode is also bullish, right? And then you can further read about if you're bullish, what are you looking for? If you're bearish, what you're looking for. So we've thought very carefully that can we take out the emotion? Can we give you an optimized view? As I said, it's not that you always will be using one particular value on an indicator. A lot of people want to use a 200-day moving average and treat it as the gospel across any and every stock. And I don't belong to that club. I'm not saying that's something wrong to do, but I think today we've got better things to do. We've got better approaches. We can easily tailor make indicators to suit the stock that you and I are trading, to suit the time frame you're trading, right? So the ATM 4.0 is all about that integration, is all about that optimization that can we create. And that's why I think it's like no other add-on out there. There's a lot out there. And I would safely say why it's one of the best-selling add-ons, why it's so popular. And why I say it's popular is because I know when people renew this add-on, that shows me confidence of the people using it. That elaborates to me that you won't be coming back if you didn't make money on it. And I speak to you absolutely as a trader to a trader. This is stuff I use for myself. As I said, I'm not a broker, I'm not an advisor. Trading and investing is what I do for a passion. And in my opinion, these tools are our best investment. Now, how do you get educated further is something I want to talk about. As I talk to you about, videos are there on the Metastock channel. We've got a lovely manual, which is nice and up to date. We've also got one-to-one support. So if you sign up for the annual, we do have one-to-one training available to you. And if you do have the monthly, we're still happy to help you, right? If you have doubts and you want to give us a call and clarify something, we're more than happy to help you and walk you through it. So do not worry about the education. Another great opportunity that's coming up is the masterclass. I do a masterclass every year. And what we're doing is in the next week or two, we have another set of the 2024 masterclass, which we're doing, which will be more objective. So today was more like an introduction into the various systems that we have. The masterclass is designed for someone who's using the product, who's read through the manual, and he's looking for that next level practical edge with using it, right? So this is definitely a great opportunity, a great time to jump on board with the ATM. And I'm going to hand it over to Jeff, who's going to talk a little bit about the entire add-on and also summarize for you what we could do for you in terms of that masterclass. And of course, I'd like to open it up for questions. So over to you, Jeff.
Cool, thank you. We did have a couple questions. Well, we had a question and a comment, and if you have any questions, make sure you get them typed in. But
So I wanted to know, what is the best time frame to use with RMO?
The most important thing is to find out exactly what is the best time frame for you. So if you are someone who's, let's say, doing, who's investing in the markets, I cannot expect you to look at a 5 minute and a 10 minutes. Find out what your heartbeat is. In fact, I've met a lot of traders who say, I'm a long-term trader, but while I've sat with them the next 1 hour, he's checked his phone 5 times to see what's the price. His heartbeat is that of, a day trader. So you need to recognize your heartbeat. Does it work well on the daily? Yes. For me, I always like to divide the market into five. So if I'm trading the NASDAQ, I like to look at a 78-minute time frame. Now, you may think this is crazy, but this is all about practicals. And this is what I like to talk about in master classes. You trade 390 minutes. If you divide that by five, you get 78. Everyone wants to look at the hourly, but do you realize if you use an hourly time frame, you may have 5 or 6 perfect hours. There's always going to be one 30-minute bar. So you're using a wrong base. So do not fall into the prey of using these round figures. So if you trade the Indian market, the Nifty, use 75. We trade 375 minutes. You need to break that down into 5 bars. So for me, I'd like to round it up based on how much the market trades as well. So very important is to find what's your rhythm. So you may say that the 75 or the 78 is slow. I'm not going to get very quick signals, but I don't want to trade every day. But if I am looking for a day trade, I probably go down to about 15. I'm not someone who's very comfortable going down to 3 and 5. But having said that, there are users who use the ATM for many, many years, and they are very happy using it on ultra low time frames, right? And often I've actually asked them, how do you do this so quick? Maybe I'm just slower. So there's no perfect one time frame, but to give you a hint, I think your start point could be a daily or a 75 or a 78, depending on the market you're trading.
A great answer. I was trying to find the mute button. Maverick had a comment that I completely agree with you, and is probably one of the biggest things I'd attribute to learning from you. He really liked the comment when you said less is more. His comment was Rahul is right, less is more. But over the years, I've loved the simplicity you use with your systems and kind of the way that you keep them really simple and objective and don't look to overcomplicate things. So that was it for the questions, though, Rahul. I do want to talk a little bit about the offers we have for the add-on. But before I do that, I want to thank you for coming in here and spending some time with us today.
Always a pleasure. Delight. Thanks, Jeff. And, I'm looking forward to that masterclass. This is going to be like never before.
Okay, cool. I just want to, before we talk about the masterclass, reiterate everything that's actually included with the ATM 4. As Rahul has said, right now the ATM, the RMO ATM, is our most successful subscription-based add-on for Metastock. And it includes like the ATM Power Screener. Rahul talked quite a bit about this, but it's a real-time alert. It can send you voice text. It can keep you aware of what's going on in a grid view. And very, very cool system. But in addition to that, you're going to get quite a few things included in terms of methods that you can use. The breakout capture, the strength weakness indicator, the super filter, the trend decider, the RMO 2, the counter trend indicator, the trend flare, normal and sub, and then the auto support and resistance, which I absolutely love. So all of those are actually included in ATM 4. And they're part of the subscription that you're going to get with them. Here I got kind of a little bit of a breakdown on what all of the systems are, but I feel like Rahul did a really good job of actually talking about what these are and what they do. So we'll just kind of go through this part a little bit. As part of RMO ATM 4, what you're going to get is the Power Screener app, the Strength Weakness Index, the Super Filter, the Trend Decider, the 2, the Counter Trend Indicator, the Flare, normal and slow, and the auto support and resistance. Those all include like scans. They also all include templates. They all include expert advisors. They all include commentary. So Rahul does a really, really good job of creating methods that are he understands. He's been working with us long enough that he understands the power of scanning. And so he implements, of course, scanning when he goes in, and commentary and all that kind of stuff. So the special that we're going to do for the webinar is here. Normally it's $149 per month for the ATM. If you want to add it to your Metastock account, you can pay just $129. And that's a permanent discount. If you subscribe as part of our introductory offer, it's always going to be $129 for you. If you prepay that, you'll pay about $12.99. There's a bit of a discount. It's about 10%. But as part of that, you'll get 2 free one-on-one sessions with Viratech and with the Viratech staff, where they're going to kind of walk you through any questions you have and help you out with it. And you also get that free masterclass that Rahul talked a little bit. Now, the masterclass is actually next Thursday, and it's next Friday. It's at the same time. It's 10 o'clock to 11 o'clock. And I think I have a slide on it, so I'll go to the next one. So there's going to be 2 sessions. Again, it starts next Thursday. It's going to be 75 to 90 minutes, and it's going to start at the same time we started today, 10 a.m. Eastern, or I'm sorry, noon Eastern, 10 o'clock my time, and whatever time you join today is when you're going to be available. He's going to talk about like the core breakout methods. We're going to record this. We're going to make it available for you as something that you can stream anytime that you want after you log into metastock.com. Okay. The second session is going to be Friday. So it's going to be a week from tomorrow. It's going to be at noon Eastern. And he's going to be talking about trade detection, integration, and volume concepts. And you can kind of read the list right here. So as I said, these are available to you. If you do the annual subscription to RMO, it's just going to be thrown in for free. We also do have if you're not quite ready to do the annual subscription, what we're going to do is we've got a bit of a special offer that's available as part of it. So normally if you did the RMO plus the masterclass, you'd pay about $886 for both of them. What we're going to do is for the webinar special is you'll pay $449. That's going to include 3 months of ATM plus your masterclass. So you'll also still get that complete discounted rate of $129 per month every month as part of it, and those 2 live training classes. So the total price that you'll pay is $499 for that, and you should do it. I look forward to seeing you in class next week on Thursday and Friday. So there's a couple of different ways you can do this. You can go to metastock.com. Oh, I should type this up. metastock.com/ATM. Okay. You can give us a call at 800-882-3040. And you can also go to metastock.com. If you have questions, you want to talk to us, go to metastock.com/sales-chat. So those are in there for you. Again, what you're going to get here, the price would normally be about $896. As part of the webinar special, you pay $499. It's going to include both sessions of the masterclass next week. It's going to include 3 months of ATM, RMO ATM. If you need Metastock, if you don't have Metastock, it's been rated #1 31 years in a row. If you want to get Metastock, we'll throw in a 1-month free trial as part of this. And there is options to get that for 3 months as well. So give us a call, 800-882-3040. metastock.com/ATM and metastock.com/sales-chat. This is such a great add-on, and I think with everything that it offers, all of the different methodologies, the ATM power screen, that's really the reason it's been one of the most successful add-ons that we've had. But join us for the class next week. Get this set up, metastock.com/ATM. So finally, I want to say thanks for being here today. I hope you enjoyed the session. I hope you learned something. And we'll see you again at the next one. Thanks, guys.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.